While Australia waits, the world is moving quickly on inflation by raising interest rates. The chairman of the US Federal Reserve says a 0.5% rate rise in May is likely. Ross Greenwood joins us now. Ross, good morning. Did it have an impact on the markets?
Boy, did it ever. So US markets were higher earlier on, but as soon as these statements were made by Jerome Powell, effectively the markets turned upside down. The Dow Jones index at the close down by some 1%. Australian markets likely to be in similar territory today when they open. One of the real problems here is the Reserve Bank of Australia seems now well behind the curve. It seems to be waiting for June. That's what the most likely outcome is when the first interest rate rise is. In the meantime, the United States at its next meeting in May is expected to raise rates by 0.5%, and that was almost all but confirmed by Jerome Powell overnight. Have a listen.
For example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does point, that points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting. But I would say that 50 basis points will be on the table for the May meeting.
But his bigger warning, Ross, was about another recession if they get this wrong. We don't hear our Reserve Bank or indeed any of our politicians, though, speak as candidly as this.
We don't, and that's a real disappointment, I've got to say, because right now, being behind the curve and with inflation clearly in Australia's economy, the Reserve Bank here has to play catch up. And therefore, as a result, the interest rate rises when they come are likely to be faster and bigger than what even maybe many people anticipate. And that's a fundamental risk for economies if they get that wrong. Now, that was conceded by Jerome Powell, who actually uses the R word again. Have a listen.
You asked about a soft landing. Basically, that's our goal. Our goal is to get demand, use our tools to get demand and supply back in sync, so that inflation moves down, and do so without a slowdown that amounts to a recession. That's our goal. And I don't think you'll hear anyone at the Fed say that that's going to be straightforward or easy. It's going to be very challenging. We're going to do our very best to accomplish that.
Elon Musk, though, Ross, he's been quite a bit in the news lately, hasn't he? He seems unperturbed by the talk of recession. He says he's got $46.5 billion US lined up to make another takeover bid for Twitter.
Just a quiet $46.5 billion lying around that you can make a takeover bid for Twitter, right? So this is the thing. He's been hinting for some time that he might go a bit rogue on Twitter, which has previously offered him a board seat if he promised not to buy any more shares than the 9% he's got currently. Well, he's been out tweeting overnight because he's lined the money up, much of which has actually been borrowed against his stake in Tesla, which has made him the richest person in the world. And as this, you can see these tweets. If our Twitter bid succeeds, we will defeat the spam bots or die trying and authenticate all real humans. It's quite clear right now that Elon Musk wants change at Twitter. He's been a vigorous user of Twitter. He's got himself into trouble with it over a period of time, but there's no doubt now he's got that money lined up, Pete.
OK, Ross Greenwood bringing us all the latest in business. Thank you, Ross. We'll talk to you soon.